All right, guys, good morning. Let's go ahead and get airborne. Joint primary and weekly options live trade brief. Give me a thumbs up if you can hear me. Sun angle is pretty bad, so I'm kind of washed out in here, so I'm not going to use my camera. Thanks for all the kind words. I appreciate that, James. Yeah, I certainly appreciate that. Hopefully everybody had a good, I'm not going to say happy, because it technically isn't that happy, as many of you read on my Twitter feed or Facebook. Memorial Day obviously isn't supposed to be necessarily a happy day, but you know, there's 7 of the people I lost out of the 11 that were 8 actually. When I was in Carrier Air Wing 11, CAG 11, here's the first female naval aviator. The first female fighter pilot was Kara Hultgreen. So she was the first female fighter pilot, Navy fighter pilot, and she was also killed during workups when her Tomcat landed aboard the ship. Approach, turn, stall, engine quit. She was gone. So obviously it's a kind of a bittersweet day. You know, I put you have a Sunday fun day because they had a last day. Raise a glass for them instead of you, especially if you didn't buy it because they earned it. And then yesterday, got up. Old uniform still fits. And my son, he's in the ROTC unit, Boca Raton High School, so he had a little bit of, got to work on his gig line. He told me last week he wants to be a Marine officer, and I obviously thoroughly support that. So, and General Patton, I think, really had the best quote. He said, "It's foolish and wrong to mourn the men who died. Rather, we should thank God that such men lived." So, yeah, I had a good day, and let's go ahead and press forward from there. We're going to debrief what happened last week, a couple of weekly options trades. Where's my Options House platform? And welcome aboard to all of our Options Weapons School folks. Couple things. You can go to optionshouse.com/TGO, and that's where you can go open your free paper trading account with Options House. I think you still get like real-time quotes for 60 days or whatever, but you got to fund it eventually. I think with a minimum of $1,000, $2,000 to keep getting your real-time quotes. And I'm heading up to Chicago this week, folks, Thursday, I believe. So I think we're going to start our Options Weapons School training, not the 6th, but the 13th down here. Let me scroll down. So the 13th will be Options Weapons School training. If you're an existing member, I think most of you got your slot already. If you're an existing member, it's $195 to get my 8 weeks of training. So shoot an email to support@Top Gun Options, or just check your email. I sent out the link for you guys. So we'll start on the 13th. I'll get back from Chicago, and then I got to get all my slides ready and updated from the last time I did Options Weapons School. And welcome aboard. We did get a full 25. We got our 25 Options Weapons School folks, about 20 annuals, and about 5 folks are going to give it a shot month to month, and then obviously they should upgrade into an annual because it's a hell of a lot cheaper. And then our final kind of announcement is the event. Now, I didn't mention this last week during Options Weapons School because obviously we have to focus on Options Weapons School, but for any of the folks in Options Weapons School who just joined, if you're interested, we're having our first ever live event down here June 9th and 10th in South Florida, in beautiful Miami, Brickell. I'll put the link in there. Obviously didn't bring it up last week because just wanted to focus on you guys in Options Weapons School. So yeah, exactly, Frank. You do have to enter and exit. John, I think I'm 3 or 4 days. My son's got a hockey tournament, so that's 2 packed days that are gone. I'm going to do a drive-by the Board of Trade and go see some old folks. But for anybody new, and if you're up in Chi-Town, yeah, I can definitely make time for a cup of coffee or beer, depending on my schedule. Just shoot an email to support. You guys know if when I'm traveling. Love bumping into all you guys and doing some good work. John, it's out in I forget where it is, Bolingbrook, or it's one of the burbs. I think I'm actually staying out in Bolingbrook, out near where I passed out in Naperville, right? I used to live out in Napertucky. So, but yeah, new folks, yes, whoever just asked that, you can attend. Here's the event. The schedule's down at the bottom. Friday, June 9th, we're going to have a nice dinner. Then we got a full day of training, and then that night we're going to have another dinner. It's mainly to meet your squadron mates, meet me, meet Doug Robertson, who does he's our VOLOB volatility arbitrage trader, and he does advanced. And I forget where it is, Tom. I'll find out where it is and let you guys know. I leave Thursday, so I got plenty of time to figure out where the hell the tournament is. But I think it's around at a bunch of rinks in the area. So, all right, guys, real quick. Hopefully everybody who just got their options weapons school slot, one of the first things you did was watch the getting started video here underneath your menu. And the second thing you did, you needed to email support at topgunoptions.com with your cell phone number to make sure you can start getting text alerts. So let's make sure you did that. And then the final thing is make sure underneath the member content here you watch the training videos, because in today's session, for all my new Primary Live Trade Brief members, there's a, I'm going to say yes, no, maybe, meaning, hey, yeah, this is a position I would put on today, and I'm not going to take 20 minutes each time to say, okay, well, it's a bull put spread, and here's how you do it. I'll still say that, but it's going to be a little bit quicker. Why? Because you can, for free underneath here, you can get access to my old Options Weapons School training videos. And the answer last week was no. I'll probably put the ones I do in the next 8 weeks up here in about 8 months. So it's evergreen content, folks. Obviously, an Iron Condor is an Iron Condor 5 years ago, and it will be 5 years from now. But you have free access right now to all these Options Weapons School vids. So if I say, hey, man, we're going to do a long call diagonal with protective put today, I'm probably going to blow through it pretty quickly, because you can always, on your own time, watch the training videos underneath the training videos tab. All right. That is about it, folks. Let's debrief the last week in the weekly options, folks. So we had what? If you got filled on the Apple and the SPX bull put spread, great victories. But if you got filled on the bear call spread, we were, taking a look at the market right now. We knew, well, Thursday was a little bit of a short squeeze. Why? Look at this technically, folks. As we went through 2400, 2405, a lot of people did what? Got short. A lot of people got short and said, it's going to pull back. It's going to pull back. There's resistance. There's a top. There's a top. There's a top. There's a, oh, wait, that's not a top. See this little pop right there? That's a short squeeze, folks. Okay, there was no reason on Thursday for that thing to do that. Trust me, I sat here. There really wasn't any, we got Trump was overseas and poking Merkel and, squeezing Marconi's hand really tight and pushing dudes out of the way, and Melania's smacking his hand away, right? We got this pop. That's the definition of a short squeeze right there, man. Everybody's saying, you know what, 2405-ish, 2410, that's it, and we're going to roll back down here. Pop, son of a. So that's a son of a bitch moment. And the market held flat into the close on Friday, which is very, very rare, but it also tells you that there was no volume. There was really not even anybody there to sell. That's what's pretty funny. It's so day late and $1 short for my bear call spread last week. Now, here's the interesting. Let's get into, I'm just giving you a little bit of my strategic mindset. I haven't even briefed yet, but we got to debrief the weekly options trades. And if you're taking, crap, this is my second week in a row, because one of my coaching Commanding Officers Club clients, he's like, crap, Wiz, of course, the 2 weeks in a row, I don't get filled on the ones that are profitable. It sucks. I'm like, shit, then either sit on your hands pull back from the table. Card counters just don't walk up and start, throwing money at the table. They watch the deck, they watch the count. So I'd probably push back from the table a little bit, or, do half the contract size. Okay, exactly, Deborah. These weeks happen, those weeks happen. If you had gotten filled on the Apple and the SPX bull put spread, it would have negated 50% of your losses. So again, that's why, if you're trading weekly options, just doing one trade, it kind of sucks. So lower the contract size maybe, and potentially look at trying to get filled on more of those trades. Okay. So, and exactly, trust me, one of my coaching guys is like, of course, Murphy's Law, the week I don't get the Apple trade or the SPX bull put spread, I get kicked in the gut. You got to know those weeks are going to happen, folks. they happen. They don't happen as often as the wins, which is great. So exactly, Silvana. That's well. Then here's what you need to do. Like I said, reduce the number of contracts and do more diversified trades. The Apple trade was great. And actually, I talked about an Iron Condor last week. I saw a bunch of email traffic over the weekend that people had gotten into the Iron Condor on their own because remember I talked about that. So they even, a lot of people were flat from last week. So remember, doing one weekly options trade, even if you feel pretty damn good about it, you can see a week like last week where we saw just a short squeeze. Everybody jumping in saying, you know what, 2405, we're getting hypoxic up here. And then we're not. And you all understand that if you're short, and we don't sell stock short. I've never done that. I'm an options trader. You don't need any of that crap. If you sell something short, you sell the S&P short, and it ticks up even a little bit, you're bleeding to death. I mean, as a short, the second this starts, it sucks. And then what do you have to do to get out of this position? You actually have to buy. So it's almost counterintuitive. You actually have to buy to get out of your position, which makes the market go up even more. So this little bit of a run out of airspeed, I thought was going to be right there. Thought we were going to run out of airspeed. If you can copy up here and put it over here, that's what I thought was going to happen. And now it looks like it's kind of doing that today. The S&P's down 4 or 5, and so I'm a day and a half late on my strategic mindset and commit criteria. So, but we'll get it back. I mean, folks, this is what we do. And remember, like I said to my coaching client over the weekend, you can't just be trading weekly options. That's why I don't think we sell that anymore as its own standalone product. You have to be in the primary live trade brief for something else paired with weekly options, because you need to attack in parallel. You need to be trading weekly options if you're comfortable with them. You need to trade the front month, bull put spreads, hedges, whatever, and you need to trade the back months. A lot of people that get very frustrated with weekly options, I'm like, what are your Jan 19 positions? Do you have a Goldman Sachs? Do you have an Apple? Do you have an XLK? And they're like, I'm like, no. If you just trade weekly options or the front months, you're going to burn out. But the folks that are diversified, I love asking every once in a while, I'm like, hey, how the Apple long call diagonal crowd looking? Wiz, well, I'm up, 17 grand on this trade. So if you do blow out the weekly options trade every once in a while, which happens, every other couple months, boom, that went to max loss. That was a missile we couldn't see. Well, then you take a look at trades like this out the Jan 19 and go, holy crap, that one's up 17 grand. This is a Jan 18 trade that's up, 15 grand. And the same thing with like the XLK. So really, really great idea to have a diversified portfolio, okay? Where's our XLKs? Yeah, 14 right here. This is a Jan 18 that's at 14 and a Jan 19 that's already at 7. So attack in parallel, folks. Have 3 arrows going across the map. Weekly options, front month, and then Jan 19s. And it'll definitely help you out mentally. Because every once in a while, like I said, man, that little pop last week when everybody said, nah, we're out of airspeed. Okay, now we are. So those types of move right there, by the time you see it, I mean, there was only 2 things that were going to happen right here, guys, is we were going to top out here and roll over and maybe sell into the close on Friday instead of be flat, or it was going to pop in a short squeeze. And that's exactly what it did. So it's an Obama teachable moment. And I sit here and watch this, folks. I mean, crap, I go for a run or go grab lunch or something, go grab a cheesesteak and come back. It's like, well, there's a short squeeze. So Rick, not a bad idea. I'm slowly moving up my longs to lock in gains. I think that's great. It's a great tactic, man. Okay, let's do our SOT and we'll get airborne. Good article one of my members sent. Here's why China's latest growth scare should worry you. So we know that they're loaded up with debt, guys. I mean, China, I mean, seriously, it's trying to wean its economy off torrid credit growth, and data and financial markets already showing early withdrawal symptoms. As regulators step up reforms, GDP could plunge 50% by 2020. Holy crap. Credit has been growing twice as fast as nominal GDP for the past couple of years. So I get it. Chinese regulators and monetary officials are working in tandem instead of cross purposes. So, and central bank has some liquidity, quack, quack, quack. We talked last week, at the beginning of the week, it seems like a year ago, that Moody's downgraded China. I mean, we're not no dummy, folks. We get that this trade has warts, but guess what? 1 second here. One of those hedge fund text. 1 second, guys. I was actually going to look at that trade today. Love how my hedge fund buddies shoot me a text about something I kind of mentioned last week. I'm like, wait a minute. That's okay. Never mind. That's what I wanted to do. Send. Okay, so here's why this is a bigger story. China, folks, a voracious appetite for what? Commodities, oil, copper, stuff, iPhones. So if this is truly China slowing down, what is it? China, your banker catches a cold. China sneezes and catches a cold. We might drop dead. So it is, Rick, that's also part of it. Yeah, they've restricted the ability for them to send money out of the country. So it's, and here they actually quote the Moody's downgrade that we talked about last week. So, we all know this, folks. This is before we put on any FXI trades. I do what? I thoroughly tell you how this trade could get killed. That's what you need to be doing with weekly options too, folks, is doing the old, hey, how is this trade going to blow up in my face and leave a mark and hurt me? Well, there you go. This is what could blow up and hurt us. They did a good job in this article in IBD of more or less saying, hey, things are scary, but if you're not super scared, this is a great place to be right now. If he is successful in overcoming blah, 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 So I'm still long-term bullish on FXI. You have to be. I know the United States and equities, U.S. equities, are the best house in a bad neighborhood. But guess what? The biggest house in this bad neighborhood is China. Even though on paper we might think or might be the world's #1 largest economy, but they're coming up. They're coming up pretty damn quick, to be honest with you. So, whoops. So that's what's going on in China. Now this is getting to the point where it's so scary that it's not. Another long weekend or another weekend. What do we get? Another bottle rocket, man. North Korea releases dramatic images of successful ballistic missile tests. And what did Kim say this time? We have a gift for the Pentagon in the next one or something like that. So this is bad. We got Merkel and Marcon or Macron, whatever the hell his name is, lecturing Trump on global warming and saying, oh my God, the Paris Climate Accords, if we don't do something about it, the world will end in a billion years. How about the world's going to end with a couple strokes of a keystroke? This is bad news, folks. The Trump trip overseas, if you're a liberal in the media, you think it was awful. Trump's rude. Seriously? What is rude about standing in front of people you signed a contract with and saying, you guys haven't lived up to your part of the deal? We've been paying for your end of what the expenses you're supposed to, and now you're saying you're indignant that we're telling you that you need to pay your fair share? I hate people like that. It's just, and the guys from New York real estate. Hey, man, we have a contract. You guys said you would pay this amount for this long. We've actually paid more than that to carry your ass. Okay? Exactly, John. China doesn't care about global warming. They know the Earth gradually goes up and even cools sometimes. What's funny, guys, is global warming is settled science. You even say that it's not, and the same people who think there's 26 genders say it's settled science. I'm like, okay, so gender's not settled science because somebody in the cosmos made 2 genders that pop out at least on this blue marble, but so climate change is settled, but let's talk about how many 29 different genders we can have. Talked about Brazil a lot last week and the week before with the political crisis. I'm you guys know what I think about the the EWZ and the Brazilian ETF, this is a Captain Kirk moment. This is definitely a boldly go where nobody's going before, or not before, but right now. Not too many people, you know to get into the Brazil ETF when it's whenever you get one of these scandals, quote unquote, from Brazil. Shocker, I know. Guess what? That's the time when you should most likely get in them. We'll talk about EWZ in a couple minutes here. Fed. A lot of interviews, a lot of Fed lieutenants have been finding microphones. This guy, what's his name? Kaplan, Dallas? Yeah. So Bob Kaplan, an interview Tuesday with CNBC, that was today, set out a course for a fairly aggressive path of rate hikes, coupled with reductions in the balance sheet. What do they have? $4 or $5 trillion on their balance sheet? And isn't it interesting, folks, that the government doesn't make money? It doesn't own one dime. It shouldn't, right? The federal government is an arbiter. It's a referee of money. It takes money. It should be Robin Hood, but it takes money from one group of people and is supposed to move them over to another group of people. So that's kind of what they're supposed to do. But the Fed, I think we're going to get 2 more raises this year. And if talking about the Fed and interest rate policy makes your eyes glaze over, it does to me too. But guess what? This means our financial positions, our Jan 19, Goldman Sachs, JP Morgan, XLF is boring, don't get in it. But those things are getting ready to get back airborne again. Okay? So, yay for financials. Boo that they pulled back lately, but, you know, with Iron Condors and Goldman Sachs and JP Morgan, folks, I think we're looking, you know, pretty damn good. Patrick, it's a great point, man. When the FOMC tries to dump their stuff on the open market, Patrick brings up a great point. He said, who's supposed to buy the Fed's assets? They paid retail, for God's sake. Exactly. Isn't that interesting? So good for our financial positions, good for overall America. But remember, one of the Wiz's Wall Street-isms, right? When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Obviously, you know, interest rates where they are now, even if we got 2 more pumps before the end of the year, we're still at extremely low interest rates. I'm sure a lot of you guys lived through the Jimmy Carter era, right? I mean, we'd think you're smoking crack if you told us interest rates could be this low someday. So, and that's essentially what our Fed did, was smoke a lot of crack and put us down here. Oil prices, guys. OPEC. Let me start with this one first. Did you tell we have to get out from XLF? Andreas, I didn't say it's a hold for me, XLF. It's boring. Every time I look at my XLF trade, my commit criteria and my strategic mindset are still sound. It just isn't doing anything for me. But, you know, if you're in XLF, Andreas, I wouldn't get out of it now because we're actually getting ready to go up. Interest rates go up, our financial positions are go up. I just say, Andreas, it's boring. I'd rather, because I think the financial stocks are safe enough where you don't have to worry about single stock risk. Well, you know, Lehman Brothers whiz and Bear Stearns. Yeah, and we learned about that. We learned about that weeks later by jumping into AIG and as U.S. taxpayers. So I wouldn't worry about that. So XLF is getting ready to take off. What I'm saying is I wouldn't get into it as a new position. It's a hold for me. Okay. Charles, been printing money with ExxonMobil or trading around our core position. We'll talk about that in a little bit, Chuck. And Perry, that's one of the reasons too, is you're right. The XLF, the front month upside calls are just boring. I mean, crap, we make more money putting those calls in a Folgers can in the yard. So exactly. Couldn't agree more. But folks, here's what's interesting. For the last January and February, and then the previous one, what, 15, 16? Remember oil? Remember oil breaking 30 and the Dow and the S&P imploding and everything's all tied together? Good article this morning in the journal about how it's starting to get a little that we might be in a new world order with that, where even the market freaked the hell out with $30 oil. It ain't going to be necessarily $30 oil, and if it is down there, eventually the Arab nations do get on one horse together and say, you know what, we do have to cut production, we're all going to starve to death. So that's a good thing. having oil a little disconnected from the Dow and the S&P, but I'm still a believer. If oil implodes like oil implodes, then we're not good. Okay, I don't want to spend too much time on oil. Stocks near record highs. The U.S. economic data crashes to 15-month low. What came out today? Home prices. Home prices rise at the fastest pace in 3 years to record highs. 3 years. Well, that's a good thing, Wiz. No, it's not. If people can't buy homes, they're, where are they going to live? So that's kind of a bad thing. So, don't sit here and say, oh, that's great news that home prices are going up that bad. That's actually bad news. Personal spending tumbles to 7-month lows after dramatic revision. So the narrative, folks, is what? I briefed you on this last week. Remember that chart of the S&P 500 and macroeconomic data? They're disconnected, man. The macroeconomic data aren't good. And it's just, guess what? Those two lines are going to meet on the chart someday. Bad data, high market. We can't go on forever. So I remain, let me go all the way back here. I remain neutral, market neutral right now. I am not bullish. I know no hedge fund manager who's taken delivery of new money going, oh, I can't wait to get more capital to throw it into this market. Dennis, the last time this happened, when those two lines diverged like that, we had a nice 5% pullback. Was it 13, 14? I don't have my pullback notes in front of me, but just anecdotally, those two lines did end up meeting eventually on a chart, and it wasn't pretty. Nice sustained, month pullback. It was those 200, 300 point down days for a couple of weeks where you're like, holy crap, is this the big one, Elizabeth? It wasn't, but guess what? It feels like it when you when you're seeing those type of moves. Okay. Let's get to, I think I'm done all the way up here. So yeah, market neutral. Not deploying. If I were a long short hedge fund manager, I'd be sitting on my hands right now. I'd be in the Hamptons right now and probably done for the summer. But this is, again, low volume. Got a nice MACD crossing down here. I just think this thing, it's not a super rollover. We're going to get back into one of these or one of these. This was kind of a melt up. This is a meltdown. And then what happens? We have big moves around a Trump or government or political or world event. There's the Obamacare failure, right? And here's the Comey memo. Anybody, if you guys follow my Twitter, I'm ranting about this. Anybody heard from Jim Comey lately or the liberal media? No, because they figured out he's a felon, and he's a felon, or he's a liar. So Mr. Boy Scout has turned into a pariah in Washington, especially since last week. As many of you know, the liberal media didn't cover it. The FBI was using their, 702 data. They were spying illegally on Americans under James Comey and Barack Obama. Again, if you read a, quote, regular newspaper, if you're lucky, that was page D17 right behind Marmaduke. So, and it's bullshit. But I think the media's kind of lost the Comey flair, and they're not too big on Comey right now because they know Republicans will rip him to shreds. Can't trust really tall guys. Well, okay. I'm 6'1". Is that really tall? All right, guys, let's do our portfolio review. And for all of my new folks, like I said, welcome aboard. I am going to say as I go through these positions, yes or no. Yes, meaning I would add a Jan 19 one of these today. No, meaning no. Or it's a hold. Okay? Again, I haven't really picked which one I'm going to do. I want an Amazon front month trade. We got to get back on the Amazon trade train. We had a bunch of good time trading Amazon lately, and then it's been nice with Amazon. So let's Apple. So here I have two trades on Apple, guys, in this portfolio. This trade is up 101% year to date. Let me get a hell yeah if you're in this one. This one is up $15,500. So again, I'm going to talk about weekly options to the end because after a long weekend, I want to see this market. It's stupid to jump right in Tuesday morning with a weekly options trade. I want to get bearish. I want to throw on another bear call spread, but actually I think and try an iron condor, because I think we're going to start moving that sideways like I told you about, and the trade you want to lead with most likely today, if you're neutral with an iron condor, is a bull put spread. But I'll roll inverted here and switch those up. We'll talk about weekly options more towards the end, because I want to see how the market trades the rest of this morning. But Jan 18 Apple trade, I'm short to next Friday's 157.5 calls, and I'm long the Jan 18 80 calls. My disaster puts got booted out of here for some reason. But here's the Jan 19 trade. This one has a year longer to work than the Jan 18, obviously, and it's up 17 grand. Yep, got a lot of hell yes on this trade. This is a yes, ladies and gentlemen. I'm not going to take the time right now to go through a long call diagonal on Apple. I think I even did that last week. Did I? No, that was Goldman Sachs. But you ready? All my new Options Weapon School folks, welcome aboard. Watch the training videos. So this is a yes. If you just take notes, just kind of scribble as you go down here and say yes, Apple Jan 19. You come to the training videos and you watch session number 7 there, okay? To go step by step through it, finding the 80 delta calls, what the math is with the protective put, and the math on, the percentage of out of the money I sell these front month upside calls. Apple, folks, is a stair stepper. For those of you who've been with me for a while, you know this for a fact. It goes up, it moves sideways, it goes up. It goes up on an event, whether it's earnings, a product release, or something like that. And I think we got WWC coming up here, right? So there is a little premium. See, there's a step, and now we're going to do this until we do something. Apple does something. When is it? Somebody Google when WWDC is. I know it's on the radar here. But let's take a look at how much profit is in the front month calls here. So we have an 82% profit in our front month upside calls. I say with any sort of credit spread or selling call short like this, if there's a 7, 8, or 9 in front of the decimal point, it's time to look at profit. Okay. Was the Jan 19 a synthetic stock position, long and short? No, Ray. These are both long call diagonals. I don't think I have synthetic stock on Apple in any of my portfolios. So let's take a look at these short calls. With the WW Worldwide Wrestling Apple Federation, June 5 through 9. I've traded. It's not an earnings event, folks, and you guys know I don't trade around earnings. It is literally gambling. You could be right and then wrong on the trade. Yeah, you could nail earnings and then you're wrong about what happens to the stock. Don't do it, it'll frustrate you. But these WWC things, I've never seen them successfully, maybe once or twice, just pull off a holy crap out of the blue, look at this cool thing in a stock rally. So I'm either okay with keeping these short calls on, but to be honest with you, I'm not, because it's an 82% gain. It hits my SOP of. So we could I might just roll them down for this one, to be honest with you. Because like I said, my overall strategic mindset on this market is neutral. Neutral to slightly, bearish, to be honest with you. So, Al, I would just put on some front month calls. So I'm going to hit close adjust. How many of these do I have? 8, I think, total? No, 10. 5 plus 5. I have 2 positions with 10 contracts, so watch this. I'm going to click close adjust. I'm just going to roll down for that expiration. Let's take some of that 82% gain off the table. I'm going to buy to close 10. Buy 10, June 2nd, 157.5 calls. Let's go down to the 155. There's still a nice boatload of premium in there. Very, very rarely do we not know about the potential something cool. I read Macworld. There's like scores of Apple trading sites, folks. I got buddies who, Apple market makers, they didn't even know a stock market exists. Or like, what the hell is the S&P 500? All they do is trade Apple. So I'm good with those. But whoever is asking a standalone Apple trade, you got to be careful. Sometimes these events, the WWDC, if it's a letdown, if they come out with something really cool, yay, we might rally. But if it's a letdown, like, okay, we're talking about the iPhone 20, where are we innovating, Apple? You might see a little bit of a sell-off. I don't think an implosion, but be very careful trading around. Treat it almost like an earnings event. Okay, I'm okay with short calls because we're hedged and we're long there. I don't feel or hear anything coming out of this thing that's going to do anything of any use or any value. All right, AIG. The Jan 18 trade, it's a long call diagonal with protective put at the 45 strike. It's only up $2,700. AIG, it's a financial, but it's not a financial. What do I mean by that? It's in its own world, man. It's in reinsurance, insurance. It's in everything, man. It really is an octopus, and that's one of the reasons we bailed the damn thing out when it imploded. So I'm not going to talk about this for too long. The Jan 19 trade's down a buck. I'm not even going to go show you what the trade is. I'm going to say if you're in it, here's how we're going to manage our short calls. They finally got rid of Hancock. The new guy agrees with not breaking it up either. Short story long, this was a lot of good news here, and then there's a short squeeze in the market. This is way, that is a massive run for AIG. If you're not in AIG right now, I would not look to initiate a new long. This is a hold for me. So if you're in this with me, let's manage these short calls. This is out to June, right? Really big pop, and it's still going here, man. Let's. This has got to give some. I've been trading AIG for years. Let's go up and out. I'm going to buy to close 20 of next Friday 62s. We got to go all the way up to the 64.5. Rolling for a debit. I got no problem with doing that. We'll cover that in our options weapons school training. It's quote less of a loss. It cracks me up that some people come to TGO. They're like, I was over at Brand X and that guy never rolls for a debit. Well, he flies and fights his jet just a little bit differently than I do. Here's the other thing you can think about, guys. I almost didn't say it, but to be honest with you, when I have long call diagonals, we know one of my front month rules of engagement is what? When something is on a tear, do what? Either get out of the way or join it with bull put spreads or, hell, a bullish double vertical. This doesn't happen often with AIG, guys. And when you run out of good news and everybody kind of looks at the stock and goes, yeah, this is kind of stupid. So that's exactly, Dennis. Dennis said, hey, AIG's been on a tear recently. I'm okay with rolling these calls up and out because it doesn't go on a tear almost ever. And that tear is running out of airspeed, okay? It's a tough thing to try and pick the end of the tear, but that's also why you need to pick a handful or a basket of stocks that you know, or indices or ETFs. You shouldn't be trading, stuff that, wait, is that a tear and will that go on forever? Or trade what you know, okay? And I know AIG, and I know this is, well, Grillo, if you think that AIG looks like get out of the way for a week or so, it's funny because I would have said that right about here, middle of last week. Once we broke through the 63, look, 63-ish has been what? Short-term resistance. Once you pop through short-term resistance, yeah, it can keep going, but this ain't, raise your hand if you think AIG is going to keep doing this. I know no news on AIG that's going to make it keep doing this. This is trading. This isn't fundamental. So eventually that thing runs out of steam, and I have no problem kind of starting to pick a top-ish up here. 64, I mean, when's the last time we saw 64? Yeah, crap, back in March, okay? But that's a little too long on AIG because most of you just don't, if you're new, avoid AIG. You can put it in your short-term pipe and smoke it and take a look at it, but, let me get my grouping together on Brazil. Brazil is a yes. Wiz, you said it's kind of crappy down there. That's exactly right. So this is Captain Kirk. This is when we do a Captain Kirk trade and say, hey, man, let's boldly go where nobody's going right now. Whoops. What the hell was that? No. Grouping. What the hell? Completely goon that up. So this is short stock. I need 10 of these. Why am I just short? Why am I naked 10? Well, those are some orphan calls. Here's the current Brazil position. So I have synthetic stock at the 33 strike. Remember, folks, when you're short puts and long calls, go to training video number 7. If you don't know what synthetic stock is, get a little bit of a brief on synthetic stock before I do my session so you come prepared. And I'm short the 36s and disaster puts at 27. There's a whole discussion in that video, guys, about the difference between synthetic stock and a long call diagonal and when I do one over the other. Okay? I got to look at my notes and how these came about on their own. But let's take a look at a chart of the EWZ. I pounded the table, guys, when this thing imploded with the tapes. I said, get in. Nice snapback, and then what? Follow through. This is a classic look at an implosion. If you wanted to wait a little bit, you know, when it imploded, I said, buy it. It's a gift here. It popped, gave a little bit back, and then hasn't looked back. This is a very bullish chart here, guys. So I think it's going to get back and settle in a range like it does. That's what the EWD does. It's like Apple, folks. Things channel until something happens, and then we get a big move. This is a bullish. We got at least 3/4 of the move back, and we're still heading up here. So I'd look at this is a yes. EWZ, write down, new folks. This is a yes. A Jan 19 long call diagonal with protective put. Just do that for now as opposed to the synthetic stock because I want to spend some time to teach you that. I would look at, and like whoever said ExxonMobil, we were doing the same thing with the Brazil ETF. Let's go performance real quick. Let's see how we're doing year to date with Brazil. SPX has recovered nicely, man. You can't keep this market down. It really is a fool's errand trying to pick a top here. So Brazil, we're up net $8,700. That's not too bad. And look at our ExxonMobil. The long call diagonal's down 6, but net I'm up $2,700 year to date. Isn't that pretty cool? So this is what we do. Even if, because like I told one of my commanding officers club guys, I said, hey man, if you have a Jan 19 strategic mindset on the ETF or the stock, you should have a front month short-term mindset as well. So let's take a look at maybe a bull put spread out a couple weeks. This is very bullish. And it's not like the JBS executive or the president's going to come out, even if they came out with more tapes like, holy crap, and we found another one. At what point does the Brazilian people just kind of shrug and go, yeah, we know. So that's why I'm bullish on this, and also short term, at least from a trading perspective. Why don't we go out to like regular June expiration? Let's go down here, and I'm bullish. Very, very strong chart as far as being bullish. You guys know I look at everything, fundamentals, everything. And obviously the political situation. 19 cents, maybe. I'll be real quick. Let me just check the metrics on this. This was in my notes over the weekend. So yes, this would be a standalone trade if you're not in EWZ at all. If you haven't gotten your Jan 19 on yet, 150. And again, I don't usually talk about trading and contract size, only about me. Remember, if commissions and everything like that are huge on your radar, maybe you don't do a 50-cent wide strike. Maybe you do $1, okay? Think about this. I'm going to sell 150 of the regular June expiration 35 puts. Why 150? Well, for risk. But if you have a strategic mindset like I do, that we're going to keep at least half, or I showed you on the chart, that this pullback is very bullish right now, then why wouldn't you do a $1 wide strike? If you don't think it's going to be going below 35 by June 17, then do a $1 wide. But remember, folks, and you know, the options market ain't stupid. It's not acting like you just showed up and you're the smartest thing in the world. It's very efficient. So, you know, tighter strike, tighter the reward, you know, wider strike, bigger the reward, but bigger the risk. So I'm a half striker, but again, you got to fly and fight your airplane in your own way. Now it's a bull put spread, so that means I'm going to buy 150 of the 34.5 puts as a hedge. Wiz, you're wrong. That they're going to, you know, the political corruption in Brazil isn't going away, guys. So let's go ahead and say we accept this risk and it's going to be fine. So let's go EWZ 530 and we'll save that. So there's the bull put spread, guys. Sell 35 puts, 150 of them, or you do the dollar wide. Okay, now create order. Mid-market, it was 19 cents. Let's go 19 cents. It is 19 cents now, plus or minus 3 cents. So about 16 cents to the downside and about 22 cents to the upside. So that's the range I'm going to look to get filled in. Okay, anything outside of that, anything below 16 is too cheap. Anything above 22 is too expensive. So the first place, and new guys, new folks at Options Weapons School, when I click analyze, the first place that I want your eyes to go is to the sad face. Okay, this is the discipline we're going to learn here, right? Max potential loss is 4,700 bucks. That's right around, it's below my SOP, obviously, of not wanting to risk more than $5,000 on any one trade. Okay, all right, that's acceptable to me. If you look at Mr. Sad Face and you give yourself a vertical head nod saying, that's going to suck if that happens, but I'm okay with it. Not going to put a bullet in my head, and I'm not going to, you know, if you are, then you're trading, then you need to do something with the contracts here, guys. Or you need to make it a dollar-wide strike. Okay? All right, I beat that dead horse. Now, after I say, yeah, I'm cool with that risk, not going to be happy if I lose it, but now our max potential profit is 2,900 bucks. And then after I look at these two metrics, I can look at the other metric I'm interested in, which is what? Probability. Using current at-the-money volatility, there's a 56% probability of max profit. And all the way down here, we can say 59% probability of at least breaking even. Now, you guys who trade with me, you guys know that I am kind of a probability guy, but I'm more of a, let's use our brain, let's take a look at the chart, and then I guess the third thing, the tertiary thing I would look at is what? Taking a look at probabilities, okay? So, you know, 50-ish, close to 60 is it kind of raises my eyebrow, but that should also tell you what? It should tell you that there is some volatility in this trade, right? There's some vega. There's some volatility in Brazil. It's Brazil, so that's why the probabilities are pretty low. But that's also why with a lot of our Brazil iron condors, they've been looking pretty good. I think most of them have been working out, is because there's meat, there's volatility, there's premium in these options in Brazil. There's a lot of, you know, potential bad that could happen. But again, when we say there's potential bad with the Brazilian trade, it's already out there. Do they re-announce that the president might be corrupt? Sure. But kind of like the Trump trade here in America, I think the market's starting to kind of shrug off Trump and scandals, okay? And remember, as a credit spread, we love being the house. We get theta, we get time decay. Unched on the day equals time decay. What's that mean? If we are unchanged, if the EWZ just kind of hangs out, we make money that day. Unched on the day, unchanged on the day equals time decay. All right, going to click create order, and we're going to blast this one out. Now, hopefully, like I said, all my new Options Weapons School folks sent an email to support and said, hey, man, here is my cell phone number because you're about to get a text alert. So let's do this. And we'll go. Actually, you know what? Never mind. I have a special announcement. We're going to conduct a test for a couple weeks here, guys. Unless you're still stuck in 2003, everybody gets their emails on their phones. I'm going to send this out to Weekly Options and PLTB. We're going to do email alerts for a second here. They actually come out in 2 seconds, just as fast as text. And I'm doing this because I want to get rid of the couple classes of people that might have SMS issues. So this goes to everybody. New, PLTB, or other way. It's kind of like ordering at Starbucks. I got to get it in the right order. PLTB, new, exactly, EWZ, bull put spread. And check this out. And I'm not limited by characters here. Watch this. So check this out. Primary live trade brief, new EWZ bull put spread. I'm not going to do images and stuff like this because that takes up too much time. I'll still do the normal email with all the nice images and the replay and all that stuff in a little bit. But this is just as fast as a regular text, and it goes to email. Expiry, I'm going to buy the 34.5 puts. I'm going to sell the 35 puts at a 10 or a 19-cent credit, plus or minus 3 cents. Like I said, always got to put our adjust. Where's the point in the trade if it's going against me? I'm a little bit nervous. Probably around 33 cents, and I'd look to eject at double the credit, 38 cents. And I'm also going to put this, looking, if the EWZ levels off and gets back into a range like it usually settles into, then we'll make this into an iron condor. We have 2.5 weeks for this trade to work. Looking to leg into iron condor. All right, so let's try this. We're doing an email experiment. I'm still on CompuServe in 1987. I love it. All right, so let me fire this and watch this. Because everybody will get this. You know, it's eating up so much customer support time and contacting these individual Canadian telecoms. I'm like, why don't we just send email alerts to everybody? And the text alerts. And some people, I don't get them, or crap, I had to reboot my phone, and then I got all 5 of them. And so let's just do that. All right. We got to move EWZ. FXI. Now here comes China. Here's my current FXI. It's flat. It's down $600, which I guess isn't flat, 500, $600. But all the brick charts we're going to take a look at, besides Brazil, are going to look like this. That is a massive move out of FXI, man. Whew. EWZ front month. Good catch, man. I thought there was something left on that, on our existing position. Duh. Let's take a look at the chart before I do that, obviously, because although it's not on a tear, it's definitely not on a tear, but here's the front month, man, right here, the 36.5. I guess I didn't review it. Let me. Oh, well, no, I already did that, Greg. I'm sorry, man. Now you're making me doubt myself. I'm like, I thought I did that first. Yeah, you guys got it. Exactly. Oh, the email. Yeah, guys, see, it's just as fast as a text alert. I didn't even look at my phone. There it is, alerts at topgunoptions.com. Yeah, we're most likely going to maybe move away from texting and just stick with email so nobody has an issue. Everybody got it. Yep, see, and it was just as fast as a text alert. Yay. All right, FXI. Even with all the Moody's downgrade and the article in the journal today, look at the FXI, man. That's a tear. This is a tear. And now I think 3 days of chewing on bad economic data and bad articles in the journal, I think we're going to move sideways a little bit here. But I thought that about these other places. Mike, don't get email on my phone normally. I know, Mike, there's 1 in 500,000 people who still aren't doing the email on their phone thing. We have more people with the SMS issues than we have people without emails on their phones, so I'm going in the other direction for a little bit. So it's kind of a benevolent dictatorship. Thanks, Mike. Appreciate it. Ralph, got email before the text. Well, Ralph, I didn't send the text, guys. Received email on the computer quicker than the phone. Exactly, Frank. I do the same thing. Yeah, Eli, do me a favor, guys. Get email on your phone. I think you're the only 2 people in the universe like that. Everybody I know, everything's on your phone. Emails. So we're going to do a little bit of an experiment because I want to reduce the customer support and service issues with the text alerts. And if they come out and they have better deliverability, the email has better deliverability than the text. Okay. Arthur, I do not have email as I get 50 emails a day. Arthur, not to tell your business, man, don't give out your email address. I love when I go shopping in the mall now. So they're like, I put the thing on the counter. They're like, your email address? I'm like, you need to have my email address to buy something? Well, and they're all shocked because I'm like, I don't, or okay, how about your cell phone number? I'm like, are we going to date? I'm that guy in the mall, guys, or anywhere I go where they ask for my email address or my phone number to buy something. I'm like, I have cash. Here's the product. Do you want this? If not, so don't give your, yeah, Glenn, exactly, folks. If created, it takes literally 0.3 seconds to set up a Gmail account. Why don't you set up like Arthur Top Gun at Gmail, and that is only used to get alerts. So guys, we're sticking with email for now. Dennis, I just created an email address exclusively for TGO. I completely understand. Yeah, Frank, I did that for a while at the beginning. I give them a fake number and email, and then at the end of the day, I just started being, it's not rude. It's just like, I'm like, no, you're not having my email address. So I don't get 50 emails a day because I don't do any of that crap. Yep, they're building leads and an empire, folks. All right, China trade. I like it. It's flat. I'd get in. This is a yes, guys. I've given you my yes, no, maybe holds so far. FXI is a yes for a Jan 19 trade, easily. Watch the training video, but I didn't get filled in my short calls last week, so let's go out a little bit. Let's stick with June 17 expiration. I'm letting the leash out a little bit on short calls here, but let's go up to the 41s. I'm going to sell 10 of these, and there's no mid-market. Guess guys are taking an early lunch. Preview. So yes to China, folks. Now, for those of you that are new, there you go, market maker, you got your penny. Let me group these together. For those of you that are new, you might want to diversify not in more than just the BRICS. Remember Brazil, Russia, India, China, South Africa. I got Brazil, I got Russia, and I got China. So pick a good BRIC. And out of the BRICS, long term, listen to me now, long term out of the BRICS, I would go China. And if that's your only BRIC, great. If not, maybe look at Brazil with the short term, like I just did with a bull put spread. Okay? Cool? Good. Goldman Sachs. Man, this, like I said, you know, well, a broken clock is right twice a day, right, Wiz? But the financials are getting ready to get airborne. In these 3 Goldman Sachs trades, I'm also short 11. Why? 3 plus 3 is 6 plus 5. So I have 3 Goldman Sachs long positions on. And I'm short to this Friday's 225s. They're only up 27%, and I still got a lot of premium in them, so I'm not going to touch these, okay? The front calls, microphone issues now. Jeff, can everybody hear me? Jeff's saying I'm having microphone issues. Nobody said anything, Jeff, but maybe you're the first guy. Nope, everybody else just rolled in and said you're hearing me fine, so it's on your end, guys. Everybody else is good. All right. All right. So Goldman Sachs, I have a bunch of Jan 19s on. One's flat, the 160, 170. That's essentially flat. This one's taking a little bit of a hit, the 170, 185. This was around November when Goldman Sachs, or no, I'm sorry, beginning of the year when we were on a tear, and then this one's down a little bit. Remember, folks, like I just said, if I have a Jan 19 on that ain't doing so hot right now, but I still like it, then what do we do? Kevin, I do like the 225 for Friday if you're looking to sell a week. Let me, no. So, guys, oh, what did I forget to mention for this week? This week is non-farm payroll, guys. We got a jobs report on Friday. Not that the jobs report anybody super cares about anymore. One second here. I really just don't think it does anything, man. The jobs report nowadays are a yawn. There's really nothing to talk about. I think it's going to be boring. But remember, just like with the Apple trade, or I'm sorry, Brazil, here's an implosion, a bounce back, and it should have been bullish, but now we're kind of rolling over a little bit here. I'd look at a bull put spread, to be honest with you, but I don't want to force too many trades. Yeah, David, it'll get airborne again. Remember, folks, if your long call diagonal is down a little bit, do what we're doing in ExxonMobil. Do what we're doing in Apple. You trade the front months, right? So I would consider a bull put spread here. It would be a little bit more aggressive. Why? Because here's a pullback. Here's a nice bullish bounce. It didn't do that, and now it's rolling over a little bit. So that's not super bullish on Goldman. Okay. If anything, we could get back into an iron condor right around here. You know. Let me lower this one down. Something like that. But it's down 1%, 1.3% today. I'd be looking at the bull put spread part of that. So, you know what? I'm not going to force a trade, though. I would, to help reduce cost basis, take a look at a bull put spread, but it's, it's a little sporty. Nike, ignore it. You shouldn't be in it. It's a hold for me. Man, they've had some interesting times of late. Stay out of retail, man. It's just not worth it. It's just not even. Let me open my Nike trade. What am I short again? The 53 calls. This is fine. I'm going to hold these. You shouldn't be in this, so I'm not even going to talk about it. How about Tiger Woods, man? I mean, is it the richer you get, the dumber you get? Come on, man. You don't have a driver? He hasn't had a driver in years. Hey-o. No, come on, dude. Where's your driver? You're going to tell me you can't, yeah, that's stupid. The guy, come on, man. He's really going down in flames. Here's our Russia trade, Mother Russia. Let me, I think it's essentially flat. I can't group these together. This is a Captain Kirk, guys. So it's not a strong yes. It's definitely a, we got the, Democrats in Washington. There hasn't been in a year to a year and a half any shred of evidence of Donald Trump and the Russians colluding in the election. But now we have a special prosecutor, and they're going to go wherever it goes. Seriously, folks? We had a woman who was Secretary of the State, had her own private email server in a bathtub. She deleted 33,000 emails that were under subpoena because she didn't want us to see her yoga habits. I'm sure those were the ones that were deleted. But the Russia trade does have some warts. Okay? Goldman Sachs bought a big ammo. Yeah, Arthur, they are taking a little bit of heat from the Venezuela trade. But guys, that's Goldman Sachs, man. They're the giant vampire squid sucking on, the face of America that was detailed in that Rolling Stone article. So, that's Goldman Sachs, man. Let's stick with Russia. It's a Captain Kirk at this point. Let me just pull up the chart here. I'd like to say you have to be bullish on a guy that does whatever he wants, but that's kind of a bad thing to say, to be honest with you. Look at just the trading range of this. But something's going to give. Like I said, I'm not a big chartist, but anybody ever see something like that, a chart that looks like that? That means something's going to give. Patrick, I thought the same thing. The Democrats, that was stupid to demand a special prosecutor. It's going to go away. Special prosecutors go on for years, folks. Okay? But yes, I like the RSX, and let me take, I don't have any, I need to get some front month calls on. 10 of them will go out to June 17. We got to go at the money to get some sort of premium here, folks. I'm going to sell 10 of the 20 and a halves. Okay, this is a yes. This is a yes to me. It's a Captain Kirk yes. I would do a Jan 19. Yeah, Juan, you definitely could wait for confirmation. It's turning into a nice wedge right there, and it's either going to something to the up or to the downside. All right, here is a June 2nd out to this Friday bear call spread, the 24.15, 24.20. I'm okay with this one, folks. I mean, I gave you my strategic mindset for the week. If you're not okay with this, Wiz, I think we might see a little bit of a rollover finally in the market, or at least us level out here. Hello. All right. Thank you. Got to go all the way back to here. So there's the pop through what we thought was going to be resistance, 2405. The next kind of Maginot line or whatever, I had to watch Saving Private Ryan yesterday, of course, is the 2415 area. So my strategic mindset for the week is neutral. Every day that goes by with this trade, the hell is wrong? Thank you. Every day that goes by with this trade, we get what? Theta. We get time decay. So I'm going to hold this trade. If you're a little frosty, you know what, Wiz? I hate picking a top. It does look like we're running out of airspeed up here, but it needs another week to work. Maybe you just roll this trade out to the following Friday. I'm not. I'm going to hang on mine and enjoy my theta. Again, we're in these wallow markets where last Thursday when the SPX went up 7 points, it was called a rally. I mean, seriously, I was laughing, folks. I'm like, oh, my God, they're calling this a rally. The SPX is up 7 points. Well, of course, it's they and the financial media, they need stories, man. It's so dead out here right now that anything, in the least bit up or down outside of 5 points makes them freak the hell out. If we went down 7 points today, you'd see red all over CNBC and, oh, my God, the world's ending. So, news sells, and when nothing's going on, nothing's selling. So I'm okay with this, but if you're an earlier adjuster, I wouldn't, David, yeah, if I wasn't in one of these, I would definitely look at a bear call spread out to Friday. I mean, we're kind of, maybe this is your bear call spread out to Friday. I wouldn't look at this one, obviously. I'd go up to the 2420, 2425. Or, well, maybe since we're talking about it, since I wanted to wait to see if the market did this. So if anything, it would be bull put spread time, not bear call spread. And it looks like it might have to be, resistance might now be support. So 2400, folks, resistance, is it support? Question mark. Let's take a look. Let's see if there's premium out to, let me just get my date right here. Second. Yep, make sure, always with SPX, there's so many expirations, you want to make sure you have the right one. Let's at least take a look at a potential bull put spread on the weekly options trade. And of course, since I'm put on a bull put spread, now, you guys take the other side of the trade because that's when it's going to roll back. Now, oops, right here, 2400. So this technically, I have this existing trade in the PLTB. This might be a little bit of an iron condor here. So let's do that. Yeah, Cruiser, that looks like a good trade. So this would be, I am legging into an iron condor because I have an existing bear call spread in the PLTB model portfolio, and this would be a bull put spread. I'm going to keep it in the PLTB. That's another thing with some of the performance issues. I'm like, well, when I do these joint sessions, sometimes I throw the trade in with that session I'm in because I hate switching between and confusing people, but I guess keeping it in this portfolio would be confusing. Let's just go here. SPX 530 and then 80 cents. Yeah, I'm going to go 80 plus or minus. Let's keep it tight, man. 5 cents. Click Analyze. The first place our eyes look is where? Max potential loss, right around 6,300 bucks. Holy crap, Wiz, that's a lot. Well, the risk is going to be about half of that because I already have on a bear call spread. So this will be an iron condor. But look at the metrics. 78% probability of max profit. 80% probability of at least breaking even. Now, I said that like so excited for a reason, not because, wow, this is a high probability trade. I say that because that means 20% of the time, Wiz, you can still lose 6,300 bucks. Exactly. That's how you have to think as an options trader, folks. Wiz, those are great metrics. I love an 80% at least break even. Yeah, I do too, until the 20% of the time when I get kicked in the gut. But we're going to try and not do that. We're going to try and manage these before they get ugly. And that's the danger in a low volume, tight market that we saw last week. I'm like, All right, kind of Braveheart week. And then Thursday, the market just kind of has a little short squeeze. I'm like, thanks, market. Let me do this email broadcaster. So I'm legging into an iron condor, right? Mark, yeah, the last time I looked, the at-the-money straddle was at about 15, 16 bucks. So this is right around that at-the-money straddle. Weekly options and PLTB. PLTB, or no, weekly options. Weekly options, new, SPX, bull, put spread. And I'm going to say legging into an iron condor. Please do not contact support and say, I'm not getting the text alerts. We're trying the no text alerts. It's the same as email, same deliverability. So weekly options, new, SPX, bull, put, spread, legging into iron condor with existing, look, I can even type more, with existing, what is it, 2410, 2415? 1 second. God, man, seriously? Select. I forgot my mouse. Yep, the 1520, okay? With existing 2415, 2420 bear call spread. 15 contracts. June 2nd expiry. Normal Friday afternoon, folks. I'll be in Chi-Town. Going to buy the 23.95 puts. I'm going to sell the 2400 puts at an 80-cent credit, and I'm going to keep it kind of tight. Hello. Credit plus or minus 5 cents. And if you only get filled on this part of the spread, the adjust would be around $1.40 and the eject at $1.60. I like this, man. I get to put a little bit more than I do in the text. I can't open that damn window. All right, here we go. Yes, I am. That's what I'm doing now. 1 second. All right, SPX, fire away. XLK, very, very nice trades, man. Let me get the grouping together, and we will congratulate ourselves on how nice these are. Again, folks, if you're taking a couple hits here and there, weekly options-wise, man, and you're not in any Jan 19s, you're just not diversified, man. Do not only trade weekly options. Pound the desk on that. This trade is up $14,000. Okay, it's a Jan 18. 25 and 30 puts and calls, and I'm short to fix 56.5 to Friday. Little pop above our 56.5 right now. I'm going to hold these because my strategic mindset for the week is sideways to a little bit down. Okay, we're really hypoxic up here, and I think we, yep, look at that. I already got, the email came the exact same time as the text would, folks. So this is awesome. I saw that, Pam. I couldn't hear it, but yeah, they were touting XLK. Good. I'm glad somebody joined from CNBC and they're now a member here. Here's the Jan 19 trade. Look how airborne it is. We're already up $7,000. So again, Options Weapon School, folks, this is a yes. Add a Jan 19 long call diagonal with a protective put. That's just a no-brainer. Tech, XLK, in case you don't know, is the tech ETF, and about, what is it, 14-15% of that is Apple. So, you know, we're a little over-appled here. You know, so I like this. What do we're short the 56.5 to Friday. I'm going to hang, like I said, so no changes. All right, no changes to here. I'm going to manage these short calls. If you're a little frosty, you know what, Wiz, I'm just not in the mood to manage these things right now. You could roll them up and out. I just roll them out up about 50 cents and out to the following Friday. Again, let's take a look at the chart. That is a little bit, that's in between a tear and a good, there's a tear. This is a good climb schedule. This is closer to a tear. But again, like the overall market, I think this is a little over, that's a hell of a rally, man. So let's sit on our hands here. Mike, what strike for XLK for Jan 19? That's why I tell you to watch the training videos, Mike, but I'll show you really quick what the calls would be, and then you gotta do your disaster put and everything on your own time because I'm running a little bit behind here. But the Jan 19 deep in the money 80 delta calls are the I'd go with the 45s. Okay. You bet, man. Right there, Mike. Those are the calls. The Jan 1945 calls are the ones I'd be using. And then just go through your normal procedure to do the disaster puts and then the front month upside calls. I'd probably go up about 50 cents and out to next Friday or the June 9 Friday. I wouldn't put these on and manage them this week. I'm going to do it since I'm already in them, but I'd go up 50 cents, all right? Mark G is filled at 80 on SPX. Roger that. XLP, this is an ignore if you're not in it. This is the consumer staples. My short calls are the 56s. Same thing here, man. We're down 17 cents. I think the consumer's a little weak this week, so I'm going to no change. Don't look at XLP. Okay, good. A lot of people are getting filled on SPX at 80 cents. Oh, wow, it's up to, I'm just going to go 85, man, because the market's given up a little bit of that rally. So I'm going to go 85. I said plus or minus 5 cents. If it goes up to 90, I'm not going to go after it, guys. Here's a good demonstration live of what I do here, folks. If it goes above 85, I'm not going to try and get filled. So I'll sit here at 80. 85, 80. Eli's filled. Good. A lot of people filled at 80. Maybe I'll just go back. I'll sit at 80 since I'm seeing a lot of you guys. Well, it's at 85 or 82, 83. All right. I'm not going to chase that. Finally, ExxonMobil. Let me get a hell yeah if you made like $3,000 or how many of you made 100% on that iron condor, man? So again, if you're looking at, this is a definite yes. A Jan 19 ExxonMobil trade. Mike, Eli, awesome. Yep, the ExxonMobil, we've been doing great year to date, man. Like I said, we're up $2,700. So if you're brand new and you're like, holy crap, Wiz, that trade's down $6,200? Yeah, it is. But net year to date, I'm up $3,000 on ExxonMobil. Okay, so this is a yes. You have a Rex Tillerson put underneath this thing. ExxonMobil ain't going anywhere. Their earnings were phenomenal. They're supposed to double. I mean, it's just. It's a good trade. So let's hang out here and get back into some iron condors. There you go, Mike. Good. Jackie, let me try English here, Jackie. For the third or fourth time in this webinar, I am not sending out text alerts. We're giving it a shot with email only. So Jackie, please look in your email that we have on file. You should have 2 text alerts. Matter of fact, the 2 emails I sent out came quicker, if not at the exact same time as text alerts. I did not send out text alerts this morning, Jackie, at all. I think I've said it. This will be the 4th time. I sent emails only from the broadcaster. Okay? Okay, I got the emails. I'm not doing 4 things. I'm going to send out an email after this webinar with the screenshots of all the trades and also the replay. No text. I'm going to see if the no text and email only thing works and puts a smile on people's faces more, okay? Just because, like I said, some of our Canucks and other folks, email deliverability is phenomenal. Everybody's got issues with cell phones, it seems like, and carriers and all sorts of crap. So, but let's press here, guys. I would look at to start getting an iron condor on again with ExxonMobil here. I like the bottom of this range, although, I mean, seriously, guys, here's the OPEC. Oh, crap, do we have an agreement? Extend production cuts? What are we doing here, guys? I think I'd be bullish on ExxonMobil here. Let's take a look at the bull put spread and get back into an iron condor. June 2nd. Let's go out to regular June expiration and give us a little bit of, let's go down maybe to those 80s. Because that would be underneath this, that 80.5. There's the low for the past couple months. Let's go with the 80 and maybe look at the 80 in it. Let's do this. $0.15. This will be an iron condor again, guys. So don't look at this and be like, holy crap, man. It's a lot of risk to reward. For those of you who've been here for the past 4, 5, 6 months, you know we've been doing iron condors on ExxonMobil in the front and crushing it, just like whoever else said. That's perfect. That's the exact trade I want. All right, folks. I'll get the front month short call in a second here. Give me 1 second. Ray, not an ExxonMobil yet. Guess at Jan 19 long. Yep. Ray, you'd be at a better entry point than I am. So Ray and any new members, this is a hell yeah. ExxonMobil Jan 19 easily. Okay. Definitely. John. Jeff, good call on the email text. I've been getting emails on my phone since yeah, exactly. John, you need to get sound effects like a bomb when the same question is repeatedly asked. Beverly, let me say this again. I would not get in the bear call spread on SPX that I have. I would roll it up $5. I'd go to like the 24, 25, 30. Go up $5 from where I am. Joseph, another vote for email. All right, cool. All right, guys, SPX, go up $5. I'd look at the 25, 30 bear call spread to Friday. Okay? You bet, Beverly. So I'm going to sell 150. Why 150? Risk. Of the June 17, 80.5 puts. How'd you pick that strike? That's the lowest we've seen in a couple months. With the OPEC deal in place, and oil usually stabilizes after they get a deal in place, even though everybody sits here and goes, they're most likely lying. Until we all decide that they're lying, I think ExxonMobil continues sideways. XOM 530. Okay. Do that. Create order. And we'll go analyze. First place our eyes look is where? Max potential loss. Right there. Right at our $5,200 level. Max potential profit, $2,300. And there's the break even. A nice 67% probability of breaking even. I want to leg into an iron condor on ExxonMobil as well. But today, don't sit there and say, well, Wiz, what would the upper strikes be? I don't know. I need to see if ExxonMobil keeps going down a little bit, if it levels off, or what if it turns around and catches a little bit of a bid. So I'm going to wait the rest of the day and see what happens with ExxonMobil. Make sense? But yes, whoever, you know, the new folks, ExxonMobil is a hell yeah for a Jan 19 trade. And you're going to get it better than I did or than I'm in. Make sense? XOM, Dennis, is a PLTB trade. Okay. David, I think I covered that in detail, man. How do I feel about the existing 24.15, 24.20? I am holding it. I'm market neutral for the week. If you're feeling a little frosty on it right now, it's Tuesday. I would take a look at rolling it up and out right now. If you're a little like, I don't know, Wiz. If you're a little like that, then roll it now. That's all right, Richard. What's the Jan 19th trade on a kunai? What's the Jan 19th trade a call spread? I don't know what you mean, kunai. What symbol? Jan 19, I assume. Yes. So kunai, watch the training videos, man. Fly out to January of 2019 with ExxonMobil. Find the deep in the money 80 delta calls, and I'll just do this real quick. What are they? They would be they'd be what I have. The closest ones are the 82s. I'd use these right here, folks. John, didn't get there yet, man. trying to get filled on the spread, answering questions. Now let's do the Jan 19. Here's my Jan 19 trade. Here's my current, here's what I'm currently short. I'm short Fridays, 83.5, guys. Let's see how much profit are in these. 96%. So I think I'm pretty good for Friday. Let's take a look at the chart, 83.5. I mean, that's all the way up above here. We can come down to like the 82s. So I'm going to roll down and out. Where are we? Right here. Let's roll, close adjust, roll down and out. Add edit legs. So I'm going to buy to close 10 of Friday's 83.5s. Let's do the 82.5s. Buy to close 10 of Friday's 83.5, putting that money in the bank, and sell to open 10 of the 82.5s. Mid-market, and let's fire that one down range, okay? And it looks like I got filled on my put spread. Whenever I get filled on a spread, guys, I come back in here and I put my little adjust dude in here, right? What's the time frame? Regular June expiration, which is the 16th. What's my profit target? A big fat goose egg. I want all the profit, which means I take in that full 15 cents. All 15 cents are in my pocket, so they're gone. Technically, that's how you explain it. So that means a $2,300 gain. Now, if it starts going up in value to about what? Whoops. Nope, I was off by a couple pennies. If it goes up in value to about 26 cents, as you guys know, that might be my adjust point. That's where I might rub my chin and go, all right, why is this trade going against me? Why, what's going on here? Should I adjust? Should I eject? What should I be doing with this trade right now? Okay, so then I'm going to click save, and now I have my little, adjust and eject point in there. All right, 11:20. Look at that, man. Hour and a half webinar. We got 3 minutes, man. Let's do some cleanup. So here's my order screen. Before I leave, I always throw the order screen up here so you guys can see if you had any questions or what you missed. I go stretch my legs right now, get a cup of coffee as the video's rendering, and I also put all the images in an email. So we'll get the email here, we'll get the replay. Like I said, what is it? PLTB, and then what's today's date? 5/30. Okay. And there we go. All right. Questions, concerns, oh, by the ways. Like I said, welcome aboard to all of our new Options Weapons School folks. I guess you don't have to email support right away with our cell phone number, since we're going to do probably a month-long experiment of just email only. Like I said, the deliverability is better, and it seems like people want emails more, and there's less of a hassle with some of our Great White North friends who are having issues. Was EWZ a new trade for today? Yes. EWZ was a bull put spread. It's right there. Okay. So it's a bull put spread, and it's, what did I say, plus or minus 6 cents. 6 cents. I mean, plus or minus 3. It's at the low range. I'm not going to go lower than 16 cents on that, guy. So let me just kind of update that one while you're sitting here. Front month strike on ExxonMobil. I think I answered that, John. Let me open it up just so you can see. It's out to Friday, right? And then I rolled it down and out. So you can see it on this page. Where is it? Right here. That's what I'm doing. To the 82.5 the next Friday. Cool. David, well, I understand that. I like the texts as they get my attention immediately. Emails don't get constantly checked by me, so I'm more likely to miss a trade. Guys, I'll say it again. I strongly recommend, David, you could open David K123 or no, David K Top Gun Options at Gmail, just so you know that anything that comes that, don't give that email address out at Nordstrom's or out at Chipotle when you're checking out. Oh, do you have an email address? Use that solely for your TGO stuff. So that's what I do. I have a couple sanitized emails that whenever I see a little one next to it, that's a big deal. But I get what you're saying. But if you give out your email address to 1,000 people and retailers and everything, you're going to get spammed like nuts. First of all, hit unsubscribe and get out of all the crap. So, Eli, nope, I'm not going to text adjustments. I'm going to email adjustments. Let me say this for the final time. We're doing an email experiment because more people, again, guys, it's a benevolent dictatorship. If a couple of you are maybe slightly inconvenienced by an email-only approach, but it helps 50 to 70 other people out to do emails, we're going to do that. That's just the way it is. So I'd rather deal with 3 or 4 squeaky wheels than 70 people. Make sense? Thanks for the book. Just got it. Looking forward to the read. JG, you welcome, John. Thanks for getting on board for the lifetime membership, guys. Yeah, remember, if you did the lifetime membership and you paid, your book's in the mail, and it's autographed by me. Stepped away, Wiz. Sorry, did you do XMM short call? It's right up here. Look on the screen, folks. Let me close this thing down so you can, well, actually, XOM was on the screen there. A couple more questions. Weekly call spread on Apple prior to WWDC on June. Nah, David, I talked about that ad nauseum. WWDC could be like an earnings announcement. It could be a sell on the news. It could be a buy. I'm just kind of keeping my front month calls where they are because I'm kind of safe. So that's where we are. Paul, that's a longer answer, and I'll probably do it in my urgent alert this week from Chicago. But Disney, short-term neutral, very, very long-term bullish. The guy's going to run for president, by the way, in 2020 or whenever Trump's done, if he's not impeached or if he doesn't quit and say, this is boring. So very, very long-term bullish on Disney, short-term neutral. They got to get rid of ESPN. That thing's sucks. John, I will. I'll get the hockey tournament details. I think I'm staying in Bolingbrook and then downtown, and we're actually moving around a little bit. Got the kids coming, all 3 of them. We're going to do a trip down memory lane because my daughter was born there. It's just going to be fun. It's going to be a good time. So, all right, guys. I will. Short-term look on bearish, John. I covered that in the my SOT, Strategic Operational Tactical. We talked about the OPEC agreement and some other stuff, so watch the replay, okay? All right, guys. Sorry for going over for about 2 minutes. I hope everybody had a good Memorial Day. Not happy. It's not necessarily happy, but hopefully you had a good 3-day weekend and maybe raised a glass or 2 to folks who paid the ultimate sacrifice, okay? The only reason we're able to sit here today and do some trading is because somebody had a last day, kind of like I put on my Facebook page. So I buried 11 of the finest women and men that this nation has ever known, and it kind of sucked. But hopefully everybody took the time to, I know you guys did. We got a pretty patriotic group here, so I thank you for that. And thanks for all the well wishes and all that stuff, because I appreciate it. Yeah, and whoever said that, thank you. Yeah, my son wants to be a Marine officer. He actually wants to be infantry. I'm like, oh my God, man, that's a Marine. But I'm very, very proud of him, and he's a good kid. So guys, make sure if you haven't liked our Facebook page, you can go there and click like and leave some comments, and you can see all my political rants if you don't get enough of them live. Okay, no email on XOM bull put spread. Did I send one out? If not, I'll send it. I thought I did. I didn't look at my my phone yet. But Ralph, thank you very much. My first session. Welcome aboard, Ralph. Remember, in the interim, guys, all my new folks, go to the training tab, get a jump up watching all these videos and Iron Condor and stuff like that. And then I'm going to do live options weapons school training in about probably the week after I get back from Chicago and when we get done with our live event down here in Miami. Okay? Bob, no, I don't. I wish I flew my own plane when we traveled. We're getting there. TGO will get big enough where we'll buy our own corporate jet. How about that? Yeah, exactly. All right, guys. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll be sending out the replay email and the replay here as soon as it renders, okay? I'll see many of you tomorrow at 1 o'clock for accelerated retirement. We'll see you. God bless.